So the question that we will be discussing will come from August. August 2022. August 2022, question number 5B. We are talking about the consolidated cash flow statement, and today we are looking at what? Disposal. In case of disposal. This is where you are going to dispose what? A subsidiary. Where you are going to dispose a subsidiary. We want to see how can we account for this. So are you there so that we can go through the question? Yes. You are there? Yeah. So that we can go through the question. Let us go through the question. And this is what we are told. We are told that W Group has owned a number of subsidiaries for several years. The following information related to the financial statements of the group. We are given the statement of financial position, whereby we say that when it comes to the statement of financial position, we will be given the previous year and what? And the current year. Then from there, we are going to explain what? The change. We explain the change by opening the T account. You can see you are given property, plant and equipment, goodwill, other intangible assets, investment in associate. Then we have the current assets. We have inventories, trade receivables, cash and cash equivalent. Then equity and liability. For the equity, we have ordinary share capital, revaluation reserve, retained profit, non-controlling interest. Then from there, non-current liabilities, we have long-term loans, deferred tax. Current liability, trade payables, and current what? Current tax payable. Then we have the statement of profit or loss and other comprehensive income for the year ended that 1st March 2022. From continuing operations, from the continuing operations, we are given what? From continuing operation, we have revenue, cost of sale, gross profit, other incomes, distribution cost, administrative expenses, operating profit, finance cost, share of profit of associate. Then we have the profit before tax, income tax expense, profit for the year. From what? Continuing operations. Discontinued operations, we have rows for the year from discontinued operations, then profit for the year. Other comprehensive income, we have gain on property revaluation, net of deferred tax, and then we have the total comprehensive income for the year. Then we have attributable for the, profit for the year attributable to, we have the non-controlling interest, we have the parent or the owners of the parent and non-controlling interest. Total comprehensive income, also it is attributable to owners of the parent and NCI, or what we call the non-controlling interest. Additional information, we are told that during the year ended at 1st March 2022, W Group disposed of its entire 80% shareholding in C Limited for cash. The shares had been acquired on 1st October 2017 for a cash consideration of 10.56 million when the fair value of the net asset of C Limited was shillings 980 million. The fair value of the non-controlling interest at acquisition was shillings what? Was shillings 224 million. It was 224 million. So in that case, can we be able to get the goodwill?
Yes.
Are we able to get the goodwill?
Yes, we are.
So the goodwill, how are we going to get the goodwill in this case?
We're going to have the fair, we need the cash consideration. That is the purchase consideration. We had the fair value of non-controlling interest, and then we less the net assets.
Okay.
After lessing the net assets, and then now we apportion that 80%.
Yes, we don't apportion because we have the non-controlling interest. Therefore, we are going to get the full goodwill. Yeah, we get the full goodwill.
And then we less the impairment.
Do you have impairment?
Number 2.
Let us first finish with number 1. We finish with number 1. So let us finish with the number 1. So let us get the goodwill. We compute the goodwill on what? On acquisition. And how do we get the goodwill on acquisition? It's given by the purchase consideration. Purchase consideration, which we are told it was cash of how much?
Cash of 1056.
1056. Then from there, we add what? We add the non-controlling interest what? Non-controlling interest fair value of how much?
Fair value of 980. No, 224.
224. Then from there we less what? We less the net assets acquired. We had the net asset acquired of how much?
980.
980. And then we are going to have the goodwill on acquisition. Goodwill on acquisition. And which company are we talking about?
C.
Goodwill on acquisition of what?
C.
Of C Limited. We are talking about C Limited. An amount of how much? We have an amount of how much?
300.
Of 300. Yeah, we have an amount of 300. Yes, that is the goodwill on acquisition of C Limited. Then from there, we continue. We are told number 2, goodwill calculated under the full fair value method was tested annually for what? For impairment. As at 31st March 2021, goodwill relating to C Limited had been impaired by what? By 75%. A goodwill impairment charge has been included within the administrative expense for the current year, but does not relate to what? C Limited. It does not relate to C Limited. So therefore, let us continue with this one. We are told that up to this date, it was impaired by which percentage?
75%.
They are saying that this goodwill had been impaired by 75%. So let us have the impairment. Impairment will be how much? 75% of 300, and you are going to get how much?
225.
You are getting
225.
200 and what?
25.
And 25. That is what you will get. That is what we are going to get. And then from there, an impaired goodwill, net goodwill will be how much?
75.
Net goodwill, in this case, will be 75. Then other than that, they have told us that we have the goodwill. This is what the examiner has said. that goodwill calculated under the full fair value method was tested annually for impairment. As at 31st March 2021, goodwill relating to C Limited had been impaired by 75%. A goodwill impairment charge has been included within the administrative expense for the current year, but does not relate to what? To C Limited. So let us get that impairment. So let us have the goodwill account. We open the goodwill account. So here, this is an asset. Give me the balance go down from our comparative. How much can you see from our comparative?
152.
We have 152. So give me the balance carried down. How much?
32.
Yes?
32.
32. Are you sure? Then from there, give me the, this is what we have. Then other than this, they are talking about impairment, isn't it? Yes, we are going to look at that. We have more information about, remember we are told that we disposed this company, isn't it? This C Limited was disposed, so we need the disposal. Disposal of what? Of the goodwill. How much did we dispose? Disposal? Or we can talk about disposed goodwill. Will it be how much? How much did we dispose as the goodwill? The goodwill was impaired by how much? Look at this case. The goodwill was impaired by 75%, meaning there is an impaired goodwill. This unimpaired goodwill is the one that we are going to do what? To dispose, which is an amount of how much? 75. Then from there, the remaining balance will be relating to the impairment. Impairment of the goodwill. Impairment loss. So which will be, here we have 152, here we have 152, and therefore how much will be the impairment in this case?
So it is 152 minus 45.
You are going to have an amount of 45. So when we will be presenting our cash flow statement, this impairment loss, it was an expense under administrative what? Under administrative expenses. So we are going, in the income statement, it was subtracted. In our cash flow under adjustment, we are going to add this impairment loss. So we are done with that. We go to the next information. And the next information, what are we told? If we can go to the next information, that's number 3, isn't it? Number 3, we are told that the carrying values in the individual account of C Limited as at the date of disposal are listed below. We have the property, plant and equipment, inventory, trade receivable, trade payable, deferred tax liability, and bank overdraft. So therefore, in this case, we can go to, we start with the non-current assets. So we are done with the goodwill. The next item, we can go to the property, plant and what? And equipment. Property, plant and equipment. Remember, this was working 1. Then we had working 2. This will be working 3. Property, plant and equipment account. So again, we have a T account here. Our T account, give me the balance go down. Balance go down is how much? 3088. Then we have the balance carried down of how much?
2816.
16. Then we had what? Disposal of how much? Property, plant and equipment.
We
disposed how much?
840.
They are saying in note 3, property, plant and equipment, 800 and what? And 40. That is what we disposed. Then from there, we continue with the information. For the inventories, for the trade receivables, trade payables, deferred tax, we will adjust them much later on. Now we are going to adjust them much later on. Then we go to note number 4. Note number 4, they are saying that the loss for the period from discontinued operation in the consolidated statement of profit or loss and other comprehensive income relates to what? Relates to C Limited and is analyzed as follows. We are given profit before tax, then income tax expenses, and then we have loss on disposal. So when it comes to the adjustments in the operating activities cash flows, that loss on disposal, we do what? We will add back. That loss on disposal. Then we go to note number 5. Note number 5, we are told that W Limited purchased 40% interest in an associate for a cash on 1st April 2021. The associate paid a dividend of how much? Of 8 million in the year ended at 1st March 2022. So let us have the investment in what? Investment in associate. So we have the investment in associate. This is what we have. Give me the balance brought down. Do we have the balance brought down? Investment in associate.
Yes, we have, but we don't have brought down.
Then from there, give me the balance carried down. How much was carried down?
Carried down, we have 816.
We are given 816. So we have 800 and what? And 16. Then from there, remember, this associate company paid dividend. When they paid dividend, we received, isn't it? So therefore, give me the dividend. Dividend received. How much did we receive as dividend? They paid how much? The total that they paid as dividend. How much are we told they were paid as dividend?
$80 million.
They paid 80 million. And then we received. So therefore, we never received 100%. So we received 80 times what? 40%. We own 40%. So how much did we receive? We received an amount of, is it 32?
Yes.
Yeah, 32. Then from there, when you go to the income statement, are you there in the income statement?
Yes.
Give me the profit. Profit from associate. The profit from associate was how much?
128.
Income statement, yes.
128.
It was 128. And therefore we have what? Acquisition. Acquisition of how much? Acquisition or purchase of how much? This plus this.
We have
how much are we getting?
6 plus 32. Any balancing figure is 816 minus 128.
Is 32, sorry? 32 plus 816, how much are you getting? 32 plus 816. How much do we have?
848.
We have 848. We have 848. Then acquisition will be an amount of how much?
720.
Acquisition will be an amount of 720. So that is what we acquire. That is what we acquire. So this amount will go to the investing activities cash flows. Then this profit will be deducted from operating activities what? Cash flow under what? Under adjustment. Under adjustment. So we are done with that working. Then we proceed with our question. Then we are in number
7.
This is number 5 is done. This was working number 4 from our workings. Then we go to working number 5.
Working number 6.
Working number, this was 2, 3, 4. Now we have 5. Isn't it? This was 1. Then 2, 3, 4. And also we have 5. The other one I just explained. We never did any working. So we go to number 6. Number 6, we are told that on 1st April 2021, W Limited commenced development expenditure on product Q. The product is expected to be launched in the year 2023. Shillings 56 million. Amortization on other intangible asset is included within the cost of sales. So therefore, in this case, we talk about the intangible assets. So let us have other intangible assets. What do we have? We talk about other intangible what? Assets. So give me the other intangible asset. Balance brought down. Balance brought down is how much? 216. Balance carried down, how much?
296.
296. 296. So give me the amortization. Amortization, we are given how much?
Amortization
56. And therefore, did we acquire? Any acquire or purchase? Any acquisition or purchase?
Yes.
So give me the acquisition.
It is
Get the total first.
296 plus 56. 352.
352. 352. Therefore, acquisition will be how much?
136.
136. The acquisition is 136. So that is the working number 5. That is our working number 5. Then from there, we proceed to the next one. The next one, what are we told? We go to note number 7. Are you there in note number 7? Note number 7, you are told that there were no disposals of property, plant, and equipment during the year, except on C Limited. Depreciation for the year was shillings what? 160 million, and is included within the cost of sales. So we go back to our property, plant, and equipment. Now we have what? Depreciation. We have depreciation. Depreciation of how much?
Depreciation of 160.
160. We have depreciation of 160. Then let us proceed. Then when we go to note number 8, we are told that part of the additions to property, plant, and equipment during the year were imports made by W Limited from a Tanzanian supplier on that 1st December 2021 for shillings what? Tanzanian shillings 5,400 million. This amount was paid in full on 28th February 2022. Exchange gain and losses are included in other operating what? In other operating income or expenses. So therefore, we have the translation exchange. Let us look at the exchange, whether it's a gain or loss. On what? On translation. So we are talking about Tanzanian what? Shillings. Then we have Kenyan shillings. Yeah, Kenyan shillings. So we start with that first what? That 1st December. So we have the rate for 31st December 2021. The Tanzanian shillings were how much? We needed how many Tanzanian shillings? 24 for us to get 1 Kenyan shillings. Then we have 28th February. This is 2022. 2022. We needed how many Tanzanian shillings? 27 for us to get 1 Kenyan shilling. So let us translate the amount that we had. We had Tanzanian shillings of 5,400 million. So therefore, let us translate based on the two. So we change them to Kenyan shillings. So the Kenyan shillings will be how much? We start with that one, December 2021. We had how much? 54. So it will be 54, you multiply by how much? By 24. Sorry, you divide, not multiply. 54 you divide by 24. How much Kenyan shillings are we going to get?
54 divided by 24.
Yes.
225.
You will get 225. Then 28, this is when we paid. 2022, you take again the same amount, but now you divide by 27, the same amount. This amount is not changing. Then you divide by 24. So how much are you getting?
Divide by 27.
You divide by 27, you are getting how much?
We are getting 200.
You are getting 200. Therefore, do we have a gain or loss? Gain or loss? What do we have? Is it a gain or is a loss?
We bought.
Look at this. This is how we interpret. This is the time of payment, and this is the time of the transaction. So did we gain or we lose?
We gained.
So we had a gain on what?
Yeah,
foreign exchange what? Exchange gain of how much?
225.
Of the difference, not 225, but the
25.
difference.
Sorry.
The difference will be how much? 25. And it is going to affect our property, plant, and equipment. So we have the foreign exchange what? Exchange gain of how much?
25.
Of 25. Foreign exchange gain of 25. What else? Did we have a revaluation so that we can close our account? Yeah, go to other comprehensive incomes. Are you there in the other comprehensive incomes?
Mm-hmm.
We had the revaluation of property, plant, and equipment of how much? Revaluation gain of property, plant, and equipment. They have told us it was how much? Yes. Go to income statement. Are you there in the income statement?
Yeah.
Other comprehensive income.
Yes.
Gain on property revaluation.
28.
Net of deferred tax. We don't need the net of deferred tax. We need the full amount. So when they talk about the net of deferred tax, it means that this is at the rate of what? 70%. So we need 100%. So it will be 100 over what? 70 times what? 28, the amount which we are given. So therefore, revaluation gain will be how much? Give me the revaluation gain. 40. Will be an amount of 40. Then from there, I think everything is there. Now we can get what? Add this and give me the total, and then we see whether we acquired new property, plant, and equipment. Did we acquire any? Confirm, it's all about adding. How much are you getting as the total?
So we have 40. 40 minutes to do. 40 minutes.
Revaluation gain.
Revaluation gain.
Yes, it's a revaluation gain. So when you add, how much are you getting?
160 plus 28. 16. So you're balancing with 38, 16.
I'm not asking about the total. The total is 38. 16. We have 38, 16. Then from there, give me the acquisition. We have acquisition.
663.
Acquisition or purchase of 663. Yes, 663. This. So remember, in this question, this is what we will need. And then from there, also we are going to need what? Also, we are going to need this depreciation, and also for the disposal, we are going to see whether we disposed at a gain or loss, but we were told we disposed. Remember, this disposal of property, plant, and equipment is for C Limited. For C Limited, C Limited, the company that we dispose. So in that company, overall, we are going to see whether we dispose that company at a gain or at a loss. So that's what we have. So we are done with that note. Then from there, I think now we are done with the all non-current assets, isn't it? Is it the case? Because when you go to non-current asset, we have property, plant, and equipment, we have goodwill, we have other intangible assets, and we have investment in associate. Now let us go straight away to the equity. So when we go to the equity, if you look at the ordinary share capital, what do you have?
For the equity, we don't have anything.
There is no change, isn't it? Then from there, we go to the revaluation reserve. What do we have?
There's a change.
There is a change. We can explain that change.
Yes.
So for the revaluation reserve, we are going to use a narration. At the beginning, it was how much?
164.
At the beginning, it was 164. Then we had what? We had the revaluation gain, net of deferred tax. Net of deferred tax of how much? 28. Net of deferred tax. And then at the end, how much did we have?
At the end, we had 192.
192. Confirm. When you take this plus this, how much do you have? So there is nothing else to explain. It has been already explained. Then from there, we go to retained profit. The next one is the retained what? Retained profit. So for retained profit, we are going to open the account. Retained profit account to see whether they paid some what? Some dividends. So this is working number 6. You can call it working number 6. So give me the balance brought down was how much? Balance brought down
2160.
We had 2160. Then we had the balance carried down. We had how much?
We had 3016.
We had 3016. Yeah, 3016. Then income statement. Give me the profit attributable to what? To this. How much? Income statement.
Income statement.
Now go to the income statement.
Profit attributable to
the parent.
Profit for the year. Profit attributable to the parent.
How much was attributable to the parent?
856.
We had 856. Then from there, let us see whether there was any dividend which was paid. Yeah, the reason we opened this account is for us to get the dividend paid. How much was paid? Compute and tell me how much was paid. Compute and tell me how much was paid.
2116 plus 856. There's nothing.
So they are balancing. 3016, and therefore nothing was paid as dividend. Then we go to working number 7. We talk about what? Non-controlling what? Interest account. We open account again. Give me the balance brought down.
NCI account.
Balance brought down. Did we have?
Yes.
How much?
NCI account.
Go to the NCI non-controlling. At the beginning, we had how much?
680.
680. We had 680. At the end, balance carried down.
512.
512. Then income statement, we had how much? How much did we have in the income statement?
We had to the NCI, we had 88.
We had 88. Huh? We had 88. Then disposal. How much did we dispose for the NCI? For the NCI, we disposed how much?
For the NCI.
For that case, are we able to get it, or we must calculate in this case?
We cannot calculate.
We have to calculate, isn't it? Yes. So therefore, remember we disposed which company? C Limited. So therefore, we start with NCI at what? At acquisition. NCI at acquisition was how much? How much did we have as NCI at acquisition?
Was it 24? We had.
It is here.
224.
We had an amount of 224. Then from there, we need to add what? We add the post acquisition what? We add the share. We normally call it the share of post acquisition what? Acquisition changes. So which is how much? What do we have? Post acquisition changes. Remember, we acquired 80%. Therefore, we did not control which percentage?
20.
We didn't control 20%. And our retained earnings was how much?
Our retained earnings was
our profit. Are we given that information? Let us see whether the information is available so that we can be able to compute that. Let us go to note. Which note was talking about this? Note number 3. Are you there in note number 3? Note number 3, you are told that the carrying value in the individual account of C Limited at the date of acquisition was how much? At the date of acquisition, are you seeing 1220?
Yes, we are seeing
1220. And at the date of acquisition, it was how much? Are you seeing 980? It is here, 980. Remember, we are talking about the net assets. Anytime we talk about disposal, the change is based on net assets. So how much? 980. How much are you getting? 20% of that will give us how much? 20% is giving us how much?
48.
It is giving us 48. That is what we have. Then we raise what? Impairment. Impairment loss at disposal. Impairment loss at disposal was how much? Did you have the impairment?
Yes, we had.
We had an impairment of how much?
45.
The total impairment we had was how much?
225.
The total we had 225, isn't it? This one, the one that we computed here, isn't it? So it was 225, that is 400%. But we only control how much? 20% as the non-controlling interest.
45.
So therefore you are getting how much? 45. We have an amount of 45. So you need to subtract these 45. So therefore, give me the non-controlling interest at the disposal date.
227.
The non-controlling interest at the disposal date is 227. So this 227 is the one we are bringing here. 227. And then from there, we do what? We balance our account to see whether there is what? To see whether there is a dividend paid to the NCI. We want to see whether there is dividend paid to non-controlling what? Non-controlling interest. We want to see whether there is dividends paid to the non-controlling interest. So how much are you getting?
Balancing figure is 768.
768.
And then 739.
768. So do we have the dividend paid?
29.
Dividend paid of how much?
29.
29. We have dividend paid of 29. Remember, this dividend paid will go to the financing activities cash flows, and it's going to be the dividends that we paid to the non-controlling interest, because we never paid any dividend to the parent company. Any question before we proceed? Then from there, we continue to the next one. The next one is a note number, we have jumped which note? We have jumped this note number for the disposal. For the disposal, it was which note?
Disposal.
For the disposal, which note? Note number 4, isn't it? Where we have loss on disposal. Umeambiwa that the loss for the period from discontinued operation in the consolidated statement of profit or loss and other comprehensive income relate to C Limited and is analyzed as follows. You are given the profit before tax, income tax expense, and then you are given loss on disposal. You are given the loss on disposal. So for this case, we are going to work reverse. What do I mean we are going to work reverse? We are going to work reverse because you will realize that the examiner has not given you the cash proceeds on disposal of the subsidiary. And how do we get the cash proceeds on disposal? Cash proceeds on disposal, we said we normally take cash proceeds on disposal, then we less what? We less identifiable, isn't it? We less the identifiable net assets fair value at what? At disposal what? At disposal date. Then also we need what? An impaired what? An impaired goodwill. We have an impaired goodwill. Then from there, other than the unimpaired goodwill, we need to less from these net assets, we less the non-controlling what? Non-controlling interest. Non-controlling interest at what? At disposal what? Disposal date. So therefore, we normally take the cash proceeds, then identifiable net asset, fair value at disposal date, then an impaired goodwill, and then we have non-controlling interest, and then from there, you will get gain or loss. Like in this case, they have given us loss on disposal of how much? Loss on disposal of how much? 232. Then from there, an impaired goodwill was how much?
25.
An impaired goodwill is this net goodwill, which was an amount of how much? 75. Then we had non-controlling interest at disposal date of how much? This one, the one that we have computed here, it is 227. Then from there, give me identifiable net asset fair value at disposal date. It was how much? It was this one, which is 1220.
Are we lessing the
Lessing there?
So we're supposed to less use order.
So therefore take this plus this minus this. How much are you getting? Let us start from this point. This plus this minus this. How much are you getting here?
We said it's how much we are lessing from the cash proceeds.
Yes, from the cash proceeds. But now we are working reverse. Remember, we are calculating what? The cash proceeds. The cash proceeds. So therefore, first take this one, add this one, and less this one. Give me the value to put here.
But why are we lessing 227? Now what is less?
227 is normally subtracted from this plus this, not at the end. So how much are you getting?
So
How much are you getting?
68 minus 75 minus 227. 1068.
So you are getting 10,
68.
68, and we are supposed to subtract for us to arrive at this. So therefore, we have x. So we are talking about x minus what? Minus 1068 will give us what? 232, which is a negative.
So
Write terms together. So our x is going to be negative 232 plus what? 1068. So our cash proceeds will be how much? How much will be our cash proceeds?
So our x will be negative 232 plus 1068. 836.
So we are going to get 836. So our cash proceeds will be 836. 836. So that is how you are supposed to compute that. That is how that is supposed to be computed. And I think we are just remaining with one account now for the income taxes. So we have the income tax what? Income tax account. Income tax account. So our space here will be hidden. So therefore we can decide and do it here, down here. I think this space can be enough. So give me the balance brought down. We have deferred and current, and the balance carried down. We have deferred and what? And the current. So the deferred we have how much? How much do we have for the deferred?
120.
At the beginning is 120. So we have 120. 120. At the end we have how much? Deferred?
112.
112. Current. Go to the current. At the beginning we have how much?
The current at the beginning we have 740.
740. At the end?
376.
376. Then from the income statement, from continuing operation, we had how much? Continued operation, income statement, continued operation was how much?
Income tax expense. 320.
320. Then from discontinued. From discontinued operation, we had income tax of how much? Go to note number, additional information. That is note number 4. Income tax expense was how much?
16.
Was 16. Then from there, we had disposal, isn't it? Disposal of how much? Disposal. Note number. Note number 3. We disposed this company with a deferred tax liability of how much?
48.
Deferred tax liability of 48. That is the disposal. 48. Then from there, other than that, we had the revaluation gain. Give me the revaluation gain.
Net of deferred
revaluation gain. So this was 28, and the total amount was how much?
40.
The total amount was 40. Therefore, give me that difference.
12.
Yeah, the revaluation here, we should have said 40 times what? 30%, which will give us how much? 12. It's going to give us 12. We normally take tukileta kwa revaluation reserve tunachukua 70%, ikikuja kwa deferred tax tunachukua ngapi? 30%, or depending with the tax rate given by the examiner. So therefore, how much are we getting now? Add so that we can balance. We see whether there was any tax which was paid. We want to see whether there was any tax which was paid. Was there any tax which was paid? Any tax which was paid? Was there any tax which was paid? Any tax which was paid?
The balance with 1208.
Oh, the total. The total is 1208. 1208. Therefore, give me the tax paid.
672.
600 and what? 72. This amount is what we need. The exact tax which was paid during the year. The exact tax which was paid during the year. And I think we have adjusted majorly what we should have adjusted. So therefore, what is remaining is for us to do what? To present the cash flow statement. What is remaining is for us to present the cash flow what? Cash flow statement. Let us present using the shortest time possible. We can present using the shortest time possible. We present our cash flow statement using the shortest time possible. So therefore, we are talking about W what? Group. We are talking about W group. Consolidated cash flow statement, consolidated cash flow statement for the year ended. For the year ended. When did our year end?
The year ended 31st March 2022.
31st March 2022. For the year ended 31st March 2022. For the year ended 31st March 2022. Then our shillings are given in
the millions.
Our shillings are given in millions. Yes, we said we start with what? Operating activities what? Activities cash flows. Operating activities cash flows. And under operating activities cash flows, we will start with the profit before tax. And this profit before tax, we have from continued operations and discontinued what? Operations. So give me the continued operations.
Profit before tax.
Before tax.
We have 1464.
1464. Then we add from discontinued operation was how much? Go to note 4. Was it note 4 or note 3? How much from discontinued operations? From discontinued operations,
we have 48.
It was 48. 48. Then from there we have what? Adjustments. Adjustments. For the adjustments, give me the main one, depreciation. How much is the depreciation? Go to the property, plant, and the equipment account. Give me the depreciation.
The depreciation was 160.
Depreciation was
160.
160. Then from there we had impairment. Impairment of what? Goodwill. Give me the impairment of goodwill.
225.
225. We opened the goodwill account. Go to the goodwill account. How much was it?
Goodwill account, we have 45. Impairment cost.
We had 45. Then give me the finance cost. Finance cost from income statement.
Finance cost.
We had a finance cost of how much?
We have a finance cost of 184.
184. Then we had computed here foreign exchange what? Foreign exchange gain of how much? We had a foreign exchange gain
25.
Of 25. Then from there, what else do we have? This again. Then we had a share of what? Share of profit from associate. Share of profit from associate of how much? Give me the share of profit from associate. How much was it?
We have a share 128.
We had an amount of 128. And then from there, other than that, what else? Go to those accounts and non-current assets and give me what we have not put here.
So we have amortization.
Amortization of what?
Intangible assets.
Amortization of intangible what?
Assets.
Intangible assets. How much?
56.
56. Then from there, I think we have adjusted almost everything. Then we go to what? Working capital what? Changes. Working capital changes. Yes.
These are impairment. You know, we have impairment of intangible assets and impairment of goodwill.
We have impairment of goodwill and amortization of intangible assets. Yes. So let us go to the working capital changes. For the working capital changes, we start with inventories. Give me the inventories at the beginning.
I have a question.
Yes.
When we are calculating goodwill on acquisition, we part of that impairment of 225.
That's why we open the goodwill account. The goodwill account will give us the impairment that we bring in this cash flow. The other one was not considered because we disposed. We disposed that company. So therefore, give me the inventory. At the beginning was how much?
At the beginning we had 1320.
We had 1320. Then we disposed how much? Go to C. C Limited, how much was disposed?
C Limited, we disposed inventory. Let me check. We disposed 304.
304. Then at the end we had how much?
At the end,
yes,
we had 944.
944.
Yes.
Have they increased or decreased? Take this 1320 minus 302.
304.
304, not 2.
304.
Then minus 304.
So then 1016.
Has it increased or decreased?
Decreased.
They have decreased by how much?
Minus 944 by 72.
By 72. So we have sold more by 72. Then we have the trade what?
Trade receivables.
Trade receivables. At the beginning we had how much?
832.
832 minus. How much did we dispose?
We disposed trade receivables of 220.
220. How much do we have at the end?
At the end we have trade receivables of 920.
920. Increased or decreased?
Decreased.
They have increased.
Decreased. Increased.
Confirm whether they have increased.
They may increase.
By how much?
They may increase by 308.
308. So if they have increased, we are selling more on credit. Then we go to trade what? Payables. Give me the trade payables. At the beginning we had how much?
At the beginning we had the trade payables of 328.
328 minus How much did we dispose?
We disposed 80.
80. How much do we have at the end?
Then we have a trade payable. We have trade payable 228.
228.
228.
So have they increased or decreased?
They have decreased.
By how much?
Decreased by 20.
By 20. So we are paying our debt. Then from there we will get the gross what? Gross operating cash flow. How much are you getting as the gross operating cash flow?
I'm getting?
Yes.
So let me just find it right now. 152. 15, 12, plus 160.
So this one you have gotten how much? This plus this. How do you?
What? 15, 12.
15, 12. Huh? Then give me the gross operating cash flow.
1548.
Add again to be sure. We have gross operating for 1548. Then from there, what else do we have? We have the we less tax what? Tax paid. Then we have what else? Interest paid. Yeah? Interest paid. So the tax paid was how much? We had computed it. It is there. Was 672. 672. The tax paid. Yeah? 672. And then we have the interest paid of how much? Interest paid, we said if we have no more information about finance cost, 184. And then from there we will get what? Net what?
Operating.
Net operating. Yeah, net operating cash flow. We are going to have net operating cash flow. In that case, we will have net operating cash flow.
692.
So we are having net operating cash flow of how much?
692.
692. Of 692. 692. That is what we have. And then we refer this as what? As A. Then from there we go to the next one. The next one is investing activities what? Cash flows. Investing activities, cash flows. Investing activities, cash flows. So let us go to the investing activities, cash flows. Investing activities, cash flows. Investing activities, cash flows. So give me the cash proceeds. We start with the cash proceeds. Cash proceeds from disposal. Disposal of what? Subsidiary. Net of cash disposed.
It's limited.
Net of cash disposed. There, cash proceeds from disposal of subsidiary. Net of cash disposed. How much was it? This subsidiary?
836.
836. And then go to the note number 3. Did we have any bank overdraft or cash?
Yes.
So we had how much?
Bank overdraft of 16.
So it will be 836 plus what? 16. If it was a cash, we subtract. So how much are we having?
We subtract or we add?
Now, being a bank overdraft, we add. If it was a bank balance, we should have subtracted. Yeah?
852.
We are having 852. Then also we disposed what? What else did we dispose?
We disposed to C limited.
C Limited is the same as the subsidiary. Then other than that, did we dispose any other thing?
NCI.
Did we dispose any other thing? Let us go to the purchase. Let us go to the acquisition then. Acquisition. What did we acquire?
Yes. Disposal of any property, plant and equipment, 840.
Is a part and parcel of the subsidiary that we disposed.
So for the acquisition,
we acquired property,
plant and equipment.
Property, plant and what? And equipment of how much?
We acquired 663.
663. What else did we acquire? Acquiring, we spend more. Did we acquire intangible assets?
Yes.
Are you sure? Confirm from
we
our
136.
Intangible assets. So intangible assets, how much? 136. Then did we acquire any goodwill?
Intangible assets. 136. Yes.
Yes.
So the goodwill we disposed.
What else did we acquire? Confirm from the T accounts.
We need investment in associates. We acquired
investment
in associates.
Investment in associates. We acquired how much?
We acquired 720.
720. And then if we acquired this, automatically we receive dividend. Give me the dividend. Received from what?
32.
From associate.
32.
How much did we receive?
32.
32. Anything else? If there is nothing else, we are going to get the net what? Net investing what? Investing cash flow. Give me the net investing cash flow.
So we need to idea about what we already had on disposal.
Yes. Cash flows. Remember, the cash flow is about cash inflow and cash outflows. The inflows and outflows. So how much do we have?
Net investing and cash flows. We have 852 minus 663 minus 136 minus 720 plus 32. 635.
We have 635. We call this B negative or positive? Negative. Then we go to the financing. Financing activities. Financing activities what? Cash flows. Financing activities cash flows. We had what? The first one, there was nothing. Then what else? What else? Under the financing, before we look at the dividend paid to the non-controlling interest, I can see them there. What else? Did we acquire any loan? Any loan that was acquired, go to the non-current liabilities. Are you there in the non-current liabilities?
Long-term loan.
We have long-term loan. At the beginning, it was more than what we have at the end, isn't it? So we have the loan what? Long-term loan repayment. How much did we pay? The difference?
272.
272. Then we had the dividend paid, and this dividend paid to the parent, there was nothing. And then we have what? Non-controlling what? Non-controlling interest. We paid how much? We paid 29, isn't it? Then from there, what else? Other than those two, anything else? So therefore, give me the total. The total will be how much? If there is nothing, we call it the net financing cash flow. Net financing cash flow of how much? Net financing cash flow of how much?
242. We added.
You just added the 2.
301.
301 negative. Then we call it what?
C.
Then we will have cash and what?
Cash equivalent.
And the cash equivalent, which is A plus B plus what? Plus C. A plus B plus C. How much are you getting?
A plus B plus C.
A plus B plus C. You are getting how much?
642 plus minus 6. 632.
Or 642 or 692?
692. We're getting minus 244.
You are getting minus
244.
244 negative. Then we add what? We add the cash and the cash equivalent. Balance brought down. They must reconcile with the cash and the cash what? Equivalent. Balance carried down. Which was how much? Did we have cash and cash equivalent? Let me see. We had them. At the end of the year, we have 160, isn't it? Are you seeing 160? Cash and cash equivalent. Question number 5B.
Yes, we have 160.
And this one is 344.
60. The other one is, what is it, my brother?
344.
The other one is 344, yes.
So when you take 344 minus 244, what are you getting?
100.
You are getting 100. Meaning there is
60 million. I hold 60 million somewhere.
So where is that 60? Your 60 ni gani yenye huku nipea jameni?
Hiyo 60?
Ni nini huku nipea?
Hizi tunachanganya kwa disposal, ingine naona kuna disposal ya income tax. Ame tusaidie.
That one cannot help. Help me with your calculator. Someone went with my calculator. Someone went with my calculator.
Imeshakuwa sawa. Sikutoka church, nimekuombea. Nauliza maswali nimekuombea. Sawa sisi. Sawa.
So up to this point, I'm getting an amount of how much? 18,040. 18,040. Then let us look at these trade payables. Trade payables, we had how much? Confirm again about the trade payables.
328. Let's go down.
328 minus 80. We are getting 248. At the end, we have how much?
At the end, we have trade payables. We have 228.
228.
But once it was an any period the other side of 80.
Yes.
We disposed 80.
Trade payables. So we have adjusted that. Let me look at the inventories, trade payables, and the other ones. Okay. So trade payables. At the beginning, we had. Can you read that figure carefully? Because what I can see and what we have written on the board are totally different.
For the trade?
Trade payables. From the question. At the beginning, it's okay, isn't it?
328.
Then at the end, we have the problem. How much?
288.
Yeah, you have been saying 228.
328, 288.
Yeah, 288. So therefore, it is 328 minus what? 80.
60, we have the 60 there.
Then from there, this one minus what? 288. Meaning that we have how much?
80.
They have increased. In this case, they have increased. By how much? By 40, not even 80. They have increased by 40. Then from there, let us get the total now.
So we adjust this
So
side.
it will be, we had
So we'll get the
1804 plus 72, then minus 308 plus 40. Here we are getting how much? 1608. Then minus 670, 672.
I get you. 752.
Then minus 184. So here we are getting
52.
We have 752. That is our A.
So
Now let us see whether the only problem we have is that.
What is the only problem?
So 752 plus what? Minus 635. Then minus 301. We are having negative 184. So here we are having negative what? 184. Then from there, plus what? Plus 344. Yes, it is okay now. So the only problem was from the trade payables. Trade payables. So that's how you're supposed to do that. That is how you are supposed to do that question. That's a question on disposal. So in our next lesson, if there will be time, we are going to do a question on disposal and acquisition at the same time. The disposal and acquisition at the same time. So because of time, our lesson will end there until our next lesson. So we are going to stop there until the next what? Until the next lesson. So we are going to stop there until the next lesson. Yes.